What if one decision by a world leader could erase billions from the global economy overnight? What if a single policy could shake stock markets, freeze major business deals, and push nations closer to recession? That's not fiction. It's exactly what happened in April 2025. And if you think it won't affect you, think again. Today, we're diving into the global trade tensions that triggered market chaos, and what it all means for your investments, your wallet, and your future. Let's break it down. It all began with a major announcement on April 2nd. President Donald Trump revealed a sweeping set of new tariffs on imports from multiple countries. These weren't just minor adjustments. They were broad, aggressive, and aimed at major trading partners like China, Germany, and even traditional allies such as Canada and the United Kingdom. The tariffs covered a wide range of goods: steel, electronics, automobiles, and even some agricultural products. The official justification? To protect American industry and correct what the administration described as long-standing trade imbalances. But almost immediately, the response from global markets was severe. Within just 48 hours, the Dow Jones Industrial Average dropped by more than 4,000 points. That's one of the steepest two-day declines in recent history. Global markets reacted in kind. Stock indices in Europe, Asia, and emerging markets also sank. Analysts began referring to it as the April shock. Investors rushed to safer assets like gold and U.S. Treasury bonds, while high-risk investments like tech stocks and cryptocurrencies took a hard hit. So why such an extreme reaction? The answer lies in uncertainty. Markets thrive on stability, on predictability. Sudden policy changes, especially those that can disrupt global trade, tend to rattle investor confidence. And these new tariffs weren't just about economic policy. They represented a major shift in international trade relations. China responded quickly, threatening retaliatory tariffs on U.S. exports such as soybeans, semiconductors, and automobiles. European leaders called the move reckless. Tensions rose rapidly, and fears of a full-scale global trade war began to spread. But it wasn't just markets reacting. Businesses across sectors started to feel the pressure. Manufacturers that depend on imported components saw their costs spike. Retailers braced for supply chain disruptions, and several high-profile IPOs were delayed or canceled entirely. Financial institutions began warning their clients to adopt more defensive investment strategies. The risk was no longer theoretical. It was real, and it was immediate. Consumers may soon feel the impact as well. Higher prices for imported goods, everything from smartphones to groceries, could become the new normal. Inflation, already a concern in many countries, could be exacerbated by ongoing trade disputes. Then there's the broader economic picture. Economists warn that if these tensions escalate and remain unresolved, the global economy could tip toward recession. Slower growth, weaker job creation, and declining consumer confidence are all potential consequences. And with central banks having limited room to cut interest rates further, there's less ammunition to fight off an economic downturn. Amid all this uncertainty, investment strategies are shifting. Risk appetite is shrinking. Investors are looking for safety, diversified portfolios, cash-heavy balance sheets, and industries less exposed to global supply chains. The focus is turning from rapid growth to long-term stability. But what happens next? That depends on how world leaders respond. If trade negotiations resume and compromises are made, markets may recover. But if retaliations escalate and more tariffs are imposed, we could see more turmoil ahead. This moment in 2025 is a reminder of how interconnected our global economy really is. One policy decision can send shockwaves across continents, industries, and households. And for investors, staying informed, adaptable, and calm in the face of uncertainty may be more important than ever. No one can predict the future with complete accuracy. But one thing is clear: global trade tensions have returned to center stage, and their impact is already being felt far and wide. So what can you do? Stay informed, stay alert, and most importantly, don't wait for the headlines to make decisions for you. If you found this breakdown helpful, Hit that subscribe button, drop a like, and share it with someone who needs to understand what's really happening behind the headlines. This is more than news. It's your financial future.